Let's get going. So, on this Thursday morning, the Rand is flexing after our latest budget meeting. Natural gas is wobbling near multi-month lows, and the S&P 500 is trying to rally even as earnings volatility keep traders on edge. So if markets had a personality today, it would be calm on the surface, but checking headlines every 5 minutes. So for those of you who don't know me, good morning. My name is Francois. I'm your market analyst here at ATFX Africa. And this is your daily market brief, where today we are analyzing currencies, commodities, and indices. 3 asset classes moving on fiscal credibility, energy fundamentals, and tech-driven sentiment. So with that being said, let's get into the actual markets for today. And we are going to kick things off with USD ZAR. Now, the South African Rand strengthened after our finance minister delivered the 2026 budget speech. And I'm not going to get into too much details today on the actual budget speech, but there are some notes that I want to make just for you guys to take home. And if I have any business owners here, please go have a look at the new VAT requirements. VAT requirements have changed. Previously, you had to register for VAT at 1 million turnover. You now only have to register at 2.3 million. Tax-free savings went up. So for the longest amount of time, you could only contribute 36,000 Rand a year to your tax-free savings account. That's now 46,000. And there's a bunch of additional rules that are really beneficial for taxpayers that came out of our new budget speech. So please go have a look at that and do some research, or drop me a comment and I will create a list of some of the changes so that you can also take it from there. Or even if you guys want me to, I can do like a full article breakdown and I'll publish it on our LinkedIn page with the new tax guidelines. So if you want me to do that as well, please let me know. I'll be very, very happy to do so. Yes, as I said, 2026 budget speech, which specifically signaled that public debt is set to peak this fiscal year. Now, that's a very big statement to make. It is projected to peak at 78.9% of the GDP in 2025 to 2026, with debt service cost easing and payments as a share of revenue expected to fall to 20.2% by 2028 to 2029. And that's a recent credit rating upgrade on a bond market rally. And suddenly, well, fiscal sustainability is back in the conversation. Expectations as well that Fitch and Moody could shift their outlook to positive further supports our local currency, alongside strong precious metal prices and political stability, which has caused the Rand to trade below 16 Rand per dollar, holding near its strongest level since 2022. However, if we zoom out a little bit on USD ZAR, it remains sensitive to global risk sentiment and dollar direction. This isn't a one-way driven market. It's a fiscal confidence meeting global volatility market. Having a little bit of a look at this as just a snapshot at the moment. Let me do this. So here we can see currently trading around 1587. It's up around 0.1% on the session. As well, the Rand is up nearly 14% over the last 12 months. Now, USD ZAR is operating in a defined mid-range here at the moment from about end of Jan to where we are right now. Now, if we have a look, near-term support is sitting here at 15.80 to the dollar, followed by this 15 Rand 40 level here at the bottom. Resistance is clustered here around the 16 Rand psychological level, followed by 16.20, which if that breaks, the dollar could gain some additional strength. So in essence, traders, this looks more like a consolidation range than a breakout structure at this specific point. So in essence, right now, we have if fiscal optimism persists and emerging market sentiment holds, support could continue to attract buyers. But if global risk aversion resurfaces, that 1620 to 1660 zone becomes critical. So this pair is trading confidence versus caution right now. Traders, if there's any questions from your side, please feel free to pop them through. I'll be happy to answer. I'll be happy to look at that for you. I do see we have a few additional people who have joined as well. So yes, please let me know. Again, that being said, I am going to move over to our second asset for today, which is natural gas. And natural gas is currently trading around $2.88 per million British thermal units, recovering slightly from a 5-month low. But, and I mean this with a pinch of salt, again, we are currently at $2.88, recovering slightly from our low at $2.87. So, yes, natural gas is currently up a whopping 1 cent. That was kind of when I checked before the session started. Having a look at it now, it has dropped. Currently trading now at $2.84, new low level. And we're going to discuss the technicals just now. Let's first get into the fundamentals. This rebound has been supported by stronger liquid natural gas exports, opposed to export plants climbing to 18.7 billion cubic feet per day. Now, in February, and is on track for a monthly record output. But here's the catch. Weather forecasts have turned milder across much of the western United States, reducing heating demand. So production remains elevated, with the lower 48 states output averaging 108.7 billion cubic feet, higher than the January 106.3 billion cubic feet. Plus, on top of that, storage was about 6% below normal in mid-February, but that deficit is expected to narrow near 1%. So in simple terms, demand pressure is easing. Supply is still strong. Exports are supportive, but not dominant enough to spark a breakout. So natural gas has fallen 25% over the past month and remains structurally pressured. So when we have a look at the chart here at the moment, and traders, I hate to say I told you so, but I kind of told you so. Where if we have a look, like just look, last week I made the joke, kind of just enter a short on a Friday and wait till Monday. And I mean, look how that has just repeated itself during this week. There, Friday close, boom, Monday open, and here we go again. This has been a tremendous pullback. I don't think I've ever really seen anything like this. I mean, yes, here we had, so this was December 2025, we had this pullback, after which we had one of the largest rallies. But then we literally pulled back so fast that we are gapping it. And it just keeps gapping all the way down. Like, this is slightly unprecedented right now. So, yes, looking at our charts right now, momentum indicators remain cautious. Yes, on the 4-hour period stochastic, we are severely oversold, but we have been severely oversold for almost 2 weeks now. If we have a look at some of the key levels, The market is hovering below that psychological $3 level, which that would be a good place to start. Some form of a recovery is if we can get back above that. Support is currently sitting at that $2.70 level. Resistance is, I would say, $3, $3.20, and then anything above that. So if price can hold above $3, we may see some stabilization. But failure to maintain that level could open the door to further downside. So natural gas is right now at a severe decision point. Again, traders, if you have any input or any questions on the analysis that I've provided so far, please feel free to reach out. Please feel free to send me a message. I'm happy to have a look at anything for you if there's something specific you also want me to look at today. That being said, let's move over to our final asset class for today, which is equities. And today we are focusing on US equities, which rallied for a second straight session before indices slipped this morning. So during yesterday's session, the Dow rose 0.6%, S&P rose 0.8%, Nasdaq surged a whopping 1.25%, and there's a very good reason for that. So tech companies led the charge, with Microsoft and Palantir posting solid gains, but Nvidia topped revenue and profit estimates, swinging between gains and losses in extended trading, which calmed some of the AI bubble concerns that everyone was having up until this point. However, Salesforce fell nearly 5% after issuing softer than expected fiscal 2027 guidance, reviving concerns in the software sector. So the story here is nuanced. Earnings resilience supporting sentiment, but select guidance disappoints, reminding markets that this is still earnings season. The US 500 or S&P 500 index is currently trading around, at the chart in the moment, it is slightly lower on the session, but over the past month, it has declined about 0.6%. But that being said, it remains up a whopping 18.4% year on year. So when we have a look at the charts on this one, you can see that the S&P 500 shows constructive structure right now. Support is sitting here at 6,850. And then we have resistance up here at the all-time high, which is that range from 7,000 to like 7,015. Now, a push back towards 7,000 would obviously test that psychological resistance. However, a slip below 6,900 to 6,850 would ignite or invite some caution. Let's rather use the word invite. It would invite some caution. So right now, this is a market balancing earnings optimism against macro uncertainty. So as discussed last week, however, as well, S&P has been a beautifully ranging market over the last couple of weeks. So, and again, we discussed this last week as well, where we said, aiming for the bottom of the range. It bounced and now it's going back higher. We are currently approaching the top of the range. If there's no breakout, we might actually just stay within this range. So, always providing really good trading opportunities. The price action on S&P 500 is just always so clear and crisp that it makes it for a relatively easy market to trade. What should you be watching today as we are going into the session and rest of this week? So firstly, if you are trading US, these are the South African economic data that is being released, from credit to trade flows and producer price data that is coming out later this week, which could reinforce or challenge fiscal optimism. If you are unsure when these reports are being released, please go and have a look at our economic calendar. Then commodities, natural gas, as always, and I always say this, weather, 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 weather. If you want to trade natural gas, become a weather expert, okay? So weather forecast and inventory dynamics remain the dominant force of the specific commodity. And if you are trading indices or any type of tech company, tech remains the heartbeat of the stock market rally at the moment. So any guidance or surprises could ripple quickly through S&P, Nasdaq, and so on. So markets are not trending wildly right now. They're rotating, digesting, and recalibrating. So our question here is, do these ranges hold, or are we quietly building pressure for a breakout? That's the question we need answered during our session, or during the US session later today. Can completely agree with your analysis today. Thank you. It's only a pleasure. Thank you for that. Well, traders, if there's nothing else, today for me is financial services fight night. So I have a bout to go and prepare for, which will be taking place this evening. So it is happening here in Cape Town at the V&A waterfront. It's an absolutely amazing venue. I think currently there's around 700 to 800 tickets that have already been sold for the event. So it's a pure charity event. So all proceeds for this evening's fight is going towards SA Children's Home. So yes, wish me the best of luck. I'm really looking forward to this evening. It's going to be absolutely amazing. Good luck. Have fun. Thank you so much. I do appreciate that. So yes, may you all have a fantastic trading session today. May you have a good day in the markets. And with that, we wrap up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets and who's my sponsor for this evening's match. So head over to atfx.com and we'll go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.